Hi, I'm Donald McIntyre, founder of Etherplan, and in this video, I'm going to talk about when Ethereum Classic is going to hit 1,000. The topics in this video are going to be the positioning logic of why it's going to go to 1,000, likely this year, the layered blockchain industry logic, the crypto bull market cycle logic, then the key short-term events that are going to happen in the next 6 months, or in the first half of 2022, the macro situation, what's happening with fiat money printing, that is going to be forever, millennials and Zoomers, what are they doing, and institutional investors. So the first thing is the positioning logic. The positioning logic, to see this, one does not have to see the typical lists of all the coins in CoinMarketCap or CoinGecko or even here on Messari.io, but one should filter all the meme coins, the shit coins, and the stable coins from those lists, and just and the proof of stake coins which are the shit coins, and they should just one should just list the proof of work coins. And you can see in this list that Ethereum Classic is very well positioned. It's been in this position all year long. It's the number 6 largest proof of work smart contracts, proof of work coin in the world. And you have Ethereum 1 that is number 2, but this coin is going to move away to proof of stake. So Ethereum Classic is going to be number 5. And if you see, other than Ethereum 1, if you see Bitcoin, Dogecoin, Litecoin, and Bitcoin Cash, which are the only coins above Ethereum Classic, those are not programmable. So the positioning of Ethereum Classic is extremely strong, and it's very likely going to be recognized and discovered in the market as time passes by, as it is happening now. Many new projects are being built on Ethereum Classic. I've spoken to the founders, and in general, they all do it because of its Code's law philosophy and long-term immutability. They recognize the true value. And this, although they are a small share of entrepreneurs and developer teams, this share is going to grow because it is the underlying truth in the industry. All the proof of stake coins and stable coins and meme coins, etc., have significantly less value than a truly fully replicated proof of work fixed monetary policy blockchain as Ethereum Classic. So this is the first point. The positioning of Ethereum Classic is extremely strong, and as the noise in all the other segments starts to die down, it's very likely that people are going to recognize even more the value of Ethereum Classic. So the second logic is the layered blockchain. The future of the blockchain industry is going to be layered, that logic. So there is a trade-off in the blockchain industry, which is you can either be very secure and less scalable, or you can be very scalable, but you have to be less secure. It's a physical reality. And that trade-off is primarily in proof of work and non-proof of work coins. So the two largest proof of work coins, in my opinion, and the most valuable ones are Bitcoin, because everybody knows that it's worth $1 trillion, the most recognized digital gold in the world. And the second one is, for me, Ethereum Classic, because as you saw on the other list, it's the only one of the proof of work coins that is programmable. So it has a premium in terms of functionality and use cases. So when that is discovered, Bitcoin is going to be the largest proof of work chain at the base layer, and Ethereum Classic is going to be the second largest, very, very likely. However, they're not scalable. The invention of proof of stake and sharding and channels and rollups and those technologies is precisely to solve that problem of lack of scalability. But the logic of that most improvement is to work together with the high security of blockchains. For example, here I put all these more scalable but less secure systems in the layer 2, and they're going to offer the service of processing billions of transactions per day, but the only way to become as secure as Ethereum Classic or Bitcoin is to anchor their state on Bitcoin and Ethereum Classic, and also to use the monetary services of Bitcoin and Ethereum Classic. For example, there's hundreds of millions of dollars already of wrapped BTC in Binance Chain and in Ethereum, and there's also at least 1 million ETC of wrapped ETC in Binance Chain, which is a layer 2 proof of authority chain. So that logic of using the scalability of one system and using the security of other by using these devices like anchoring or using the monetary services through bridges and stuff like that, combined, that's going to be in the future the name of the blockchain industry. Just like the internet today is not really, the internet is not one product. The internet is at least 7 components. When you go and see the OSI layered system of the internet, it has 7 layers, and those layers combined and components, they provide a single service which we call the internet. The same thing is going to be in the blockchain industry. People in the future are not going to use Ethereum or Bitcoin or Ethereum Classic or Binance Chain or a single Oracle system or a single channel system. People are going to use their wallets, which are here in layer 4, and from the wallet they're going to use an app, and that app is going to have their functionality distributed in different systems, in different components, which all together are going to produce the experience of blockchain in the future. And in this layered approach, we're going to have the most secure core part at the base, then the higher performance chains, but less secure in layer 2. Above that, you're going to have the applications like dApps, decentralized exchanges, NFTs, stable coins, etc. And the fourth layer is going to be the interfaces that humans use, like MetaMask, Trust Wallet, Coinbase even, or Binance, etc. Those are going to be at the top, and they're going to turn around and use the best components of the industry. So this is another benefit for Ethereum Classic because it's going to be recognized as this huge base layer system. The next point is the crypto bull market cycle logic. So that is still standing. Everybody, there's many people very kindly reminding me on the internet, in Discord and Twitter and elsewhere that my price target for the end of 2021 of 1,000 for ETC didn't happen. So I want to thank them for their service because I really didn't know that. I checked the market every 10 seconds, but I didn't know that ETC had not reached the price target. So thank you everybody for your service. So what's happening is that, in my view, this is a map of the past cycles. You have the 2013 crypto bull market cycle, then you have the 2017 crypto bull market cycle, and this darker line is the average between the two. And this current cycle that started in 2021 started very strong, and it was parallel to the other, or within the range of the other cycles. But we came out at some point, and we all expected that by the end, by November or December of 2021, it was going to suddenly explode higher to reach these levels, no? And Bitcoin was going to be above 100,000. I thought it was going to be 125,000 by now. Today is January 1st of 2022, and Bitcoin is trading at 47,000. Ethereum is trading at 3,750, and ETC is trading at 34. So evidently, everybody who had this vision of following the crypto cycles every 4 years missed the mark. I think what's happening is that in this case, for several reasons, in the macro situation, the cycle has shifted to the first half of 2022. So I think that Bitcoin is going to eventually go up here to 125,000, or maybe these guys, they have 288,000 mark here, or 140,000 according to the stock to flow ratio by 100 million USD. It should get to around 200,000 or 300,000, and even he thinks it could go to $500,000 in 2022. But let's say it goes to $125,000, which is my target because I use gold and how Bitcoin is increasing its share as compared to gold. So I think it's going to reach that in this time frame, more or less, in the first half of. So that would be the remaining part of this of the 2021 bull market cycle that didn't happen yet, and I think it's going to happen in the same time period. So there's two important events. So I'm going to talk about two short-term events that are going to happen specifically in ETC, and by the end of April or beginning of May. Today, Ethereum Classic is paying 3.2 ETC per block as block rewards, so that's increasing the supply. The supply is algorithmic and fixed by protocol inside Ethereum Classic, so nobody can touch it, and it's going to have 210 million ETC at most in the next 100 years. So that doesn't change. What happens is that, like Bitcoin, that goes paying less and less every 4 years, ETC pays less and less as mining rewards every 2.38 years approximately. So now it's paying 3.2, and by May, say by April or May of next year, it's going to go down by 20%. So it's 1/5, and that's why we call it the fifthening instead of halving. And the inflation of ETC, the current inflation rate, is going to go down from 5.49, which is the current one, to 3.91. So like Bitcoin, the inflation rate, it goes down, and that is going that is how we guarantee the features of digital gold and scarcity and sound monetary policy. So this event is going to happen. The fifthening is going to happen in a few months. So that's a very key event that is going to drive the value of ETC, in my opinion. And the other mega event, which is external to ETC, is that Ethereum, this is the Ethereum Foundation website. This is the latest post in December. Let me see. Yeah, December 22, 2021. And they estimate that in Q1 or Q2 of 2022, they are going to merge from proof of work to proof of stake. So like I said, this is going to delete Ethereum Classic from this line, and Ethereum is going to automatically Ethereum Classic, it's going to delete Ethereum from here, and Ethereum Classic is going to automatically become the 5th largest proof of work blockchain in the world. And you're going to see that these guys are not programmable, so it is only most obvious that the market is going to value Ethereum Classic when there's no more proof of work smart contract platforms at the base layer, or large ones at least. It's going to value ETC more than Dogecoin, Litecoin, and Bitcoin Cash. So this is an external event, and it's very important in the lifetime, in my opinion, of Ethereum Classic, because it's going to leave the top blockchains clear, and the positioning clear for Ethereum Classic to occupy what today is occupied by Ethereum 1.0. And like I said, it's happening. More projects are coming. It's not that it's my imagination. There's more projects coming now. There's many entrepreneurs that have chosen to build on ETC because of its code is law philosophy and its features that guarantee mutability in the long term. So there's 4 or 5 NFT projects. There's a market. There's 2 markets coming of NFTs, like an OpenSea, but on ETC, and it's 2 projects apparently coming. There's already between yesterday and today a swap project was launched called Hebe Swap. So now there is a swap market and liquidity pools inside Ethereum Classic. And there's projects also that are building multi-layered apps, like a coin in Binance and that pays rewards in ETC. So there's a lot of projects coming to Ethereum Classic, and that's organic. Nobody's paying them to come. They just do it because they see the value, and they're entrepreneurs risking their own capital and their own time in building these products, and they're being successful. I've bought several NFTs. I'm going to trade my own NFTs when a market is created in ETC, and I'm going to buy a coin in Binance that pays me rewards in ETC, because I want to accumulate more ETC in my lifetime. Um, then there's the macro situation. No, so this is the merger. This is an event that is very important in the next 6 months. What is the macro situation? The macro situation is the large-scale economic situation of the United States, Europe, Asia, Africa, South America, and the world in general. There's one thing that's happening everywhere, at least in advanced economies. In emerging markets, it has been happening for decades, if not hundreds of years, which is they have been printing money like crazy in the last few years. And that has resulted in a huge national debt. For example, in the United States, is nearly $30 trillion. This is 126% of the GDP. And this level of debt, now it's at very low interest rates because the Fed has artificially kept interest rates very low. But say that the interest rates go to 5%, which are normal long-term rates, risk-free long-term rates. The government, to the already huge federal spending of nearly $7 trillion, they're going to have to add $1.5 trillion just of interest payments. And that's is going to be impossible to cover with taxes, so they're going to have a permanent deficit. So they're going to have a permanent need to issue more national debt. So the Federal Reserve is going to have a permanent need to print money just to buy that national debt that the United States is going to be issuing, creating every year. Issuing bonds to cover that debt, to cover that deficit. And this is happening also in Japan, in Europe, and it has been happening forever in countries like in Latin America, in Africa, etc. So fiat money, the experiment that started 50 or 70 years ago, has failed. Fiat money is going to be, inflating and printing, money printing is going to be forever. It is impossible to solve this situation unless the United States decides to default. So the United States has to choose between printing forever or fixing the situation and defaulting. Both are horrible results, but usually in all the experiences in fiat money in the majority of countries in the world, they choose to continue printing money. So that's what I think is going to happen. Because Ethereum Classic is hard money and there's a cap of 210 million, and they have it has this decreasing payout of rewards every 2.38 years. It's going to be hard money, and compared to fiat, it's going to go up eternally. So this is a macro situation that has accelerated in the last 3 or 4 years, but it's going to continue boosting the price of Ethereum Classic in fiat. And the other thing that's happening is a demographic situation on a global scale. This is incredible because the blockchain is a global phenomenon. It's not a product of the Europe or the United States. This is a global phenomena. Even my kids in Argentina own ETC and they're saving in ETC, and I send them ETC, and we're all migrating to ETC. So millennials and Zoomers like my kids, they are in their early 20s, are saving natively. They have some cash, I save in ETC. I have some cash, I save in Bitcoin. I have some cash, I buy an NFT. Crypto, millennials and Zoomers and the future generations are going to be crypto first generations in terms of investment and savings. Before, the classical investments were mutual funds, bonds, corporate bonds, stocks, etc. In the future, I think it's going to be crypto first, and it's going to be Bitcoin, of course, as a safe asset, as digital gold, and Ethereum Classic is also digital gold, but it's programmable, so it's going to be there in the portfolios. And this trend is demographic, it's a large scale, it's a sub-trend of the whole information superhighway trend that started in the 80s, and it's going to continue, and we're going to finish digitizing everything. The digital transformation of the world is going to be complete in the next 30, 50, or 100 years. And this means that digital assets or crypto are going to be the money and saving mechanisms of the world. And finally, institutional investors in the short term, they continue to buy Ethereum Classic. Forbes, this is a report by Forbes. The institutional investors are pouring money, and they gave the example of BlackRock, which is the largest money manager of the world. They have $9.5 trillion in assets, and they already started investing in Bitcoin. And from there, they're going to go to ETC and Ethereum 2.0 and invest in other crypto assets, etc. So ETC is going to be there in the portfolio. I think a good model to follow is Grayscale. Grayscale, in that sense, they get it. Their largest position is Bitcoin. The second largest position is ETC. And then they have other coins like Zcash and Mana. So that's going to be how portfolios are going to look in the future. And ETC is going to be a primary asset because it's a base layer, proof of work, fixed monetary policy, and programmable blockchain. So that's my whole view. And my response to this, when Ethereum Classic 1000, I think is going to be in the next 6 months. So by the end of June, I think that Ethereum 2 is going to be existing already. The merger would have been completed. ETC is going to be the only proof of work smart contracts blockchain at the base layer, and the largest one at that. The fifth inning is going to occur also in that period. And the macro situation and the cycle of the bull market, of the crypto bull market, is going to continue. So I think that my target has moved from the end of December of 2021 to the end of June of 2022. All right, thank you very much. Bye bye.